Good afternoon. This is Melissa with the StockSwoosh.com and welcome. Welcome to ISRG. Today is Tuesday, July 9th, and here we have this incredible, amazing, beautiful, fabulous, very surprising. Surprising meaning wasn't expecting something this fabulous at this price point to work this fabulous Golden Gap. It's interesting. Whenever I see something that confirms the fabulosity of my own system, and what do I mean by that? I mean, seeing something work doesn't matter what the price point. Doesn't matter what the price point. Could be cheap, could be low, could be high, could be expensive, could be gargantuan. It doesn't matter. And the other thing sometimes that I'm realizing too is how well the follow through happens on these. How well and unbelievable the follow through happens, not only on the day, but on the overall charts using my rating system. So as time goes on, the interesting thing is that I'm getting more conviction, as if it's even possible, in my own system. I think that when you trade for a living and you do something day after day after day after day after day, you do need to have something where your conviction is strengthened. By doing so, it actually helps you become a better, stronger trader, in which case then guess what? You're going to make more money and be more accurate in your decisions and your thought processes and trade with less concern about the risk and fear, which of course is an issue for anyone that trades. The great thing about this stock is, in this gap today, is that it's a beautiful example and one of the best I've seen to date, besides Apple. But even this is really more so even than Apple. Something that proves that it doesn't matter what the price of the stock is. If the gap rate's high and rates over 20 points, then it will trade perfectly. And you trade it and you play it and you rate it and you trade it and you do it. I've got to use this example in some kind of webinar I have to do some point, because the risk to reward was in this trade today. Even at this price point, the risk to reward was in the trade. So let's just go over it here. From tip to toe, the high of this bar here is not quite 430, 429.88. It did actually go up to 430 in the 1 minute. We'll have to go look at it. It doesn't show here, but it's basically 430 is extension, and the low here is 406.69. It did go to all the targets today. The first target was 410. The second target was 408. And I actually thought it would crash to the floor of the earth at 408. This did not do that when it got under 408, but it did have a deep drop off. Here's what happened when it hit under the number here. Look, you can see it. Actually, when it started to break in here. Well, when it started to crack 410. When it started to crack 410, which was that first area, is here when it went, and then it just went right through 408. And then went right all the way down to 406.69, which is many times what happens when momentum gets in something. Interesting thing about this, though, is that, like I said, the risk to reward was in the trade. So it moved 20-some dollars from the entry. The stop, though, was a hefty stop. Excuse me. Why? Because there was a lot of spread in this. Now, it looks like the spread is not that bad now, but at one point today it was 80 cents. You know, it's roughly around 45.50 right now. There was a couple times you'd look at it, it was like a penny, but that never stuck. And this is just one of those types of stocks. It's a medical surgical company that I knew would have a spread. I wasn't exactly sure what the spread would be, and it's changed so much that when you decide to take a position, you have to give it enough of a cushion. 50 cents really was a good enough of a cushion in this, though, today. I only saw it like at 80 cents, like at one point. For the most part, it's been between 30 and 50 for most of the day that I watched it. It would hit like 1 penny at some times, but really it was pretty much a cushion of like 50. It would have done you fine today in this if you did it. I was discussing this earlier today in the room, and I was saying, gosh, you know, the interesting thing is that I doubt any traders did the stock at all today, even gap traders. Okay, why? Because of the price point. Because of the price point and having to be able to trade this type of sizable thing, you know, stock symbol, and also not only that, knowing what to do. You can't trade a stock at a $400 plus price point unless you know how to trade. It's idiotic, quite frankly. It's silly to do it, and you shouldn't unless you know how to trade. If you know how to trade and know how to do entries, you know where to put your stop, and you know about gaps, and you understand the strategy, by all means, go for it. But if you don't know how to trade a stock at this price point, if you don't have a strategy, if you don't know the right entry, if you don't understand how to read charts or price action, you cannot trade at this price point. It's just simply not the right thing to do because you can hurt yourself. The way to make money doing this is what? Trade it like any other stock you'd normally trade, except for making sure you're giving yourself the cushion. Making sure if you take the trade, you've got the proper risk to reward if it goes to the target, which in this case it did. It didn't even go to the dream target, by the way. And also, not only that, being careful to make sure you put in a hard stop. And I actually always use hard stops. I know sometimes people do not use hard stops. However, I teach people to use hard stops. You do need to use hard stops. And if you trade something like this and you don't use a hard stop, that's a mistake. Okay? Because if something turns against you, this thing could run against you, $25. So you need to use hard stops, specifically in these kinds of price points. And they have to be at the right place. So the overall point I'm trying to make, though, is that let's just say you had a small account and you wanted to risk 100 shares. At the price point in this, you would have needed roughly like 43 grand in buying power. So you could have done it. And in a prop account, you could have done it with like $4,300. And if you had done that, and you had taken this trade today into the first drop off, into the first number, not even 406 something, into the 410 number, not even the whole amount, not even the big move, not even the second trade of the whole move, you would have made $1,700. So it still had a 4.8 roughly risk to reward just with the first move down. And then of course, if you got it into the full amount, it was like almost 6. So even at this price point, even at this type of stock symbol, everything about it, the risk to reward is there. Why? Because the gap rated high. The setup was there. It was beautiful. It was clean, and you get it. And this rating system that I have is really something because it doesn't matter what the price point is. The entries will give it to you. The risk to reward is there in the setups when the gap rate's high. That's part of the rating system. Part of the rating system is knowing that the gap is not only going to work in the right direction that you're getting when you're rating it and picking it, but part of what I designed for myself, because I was tired of doing trade after trade and getting dinged out of things when I was making this stuff up back in 2009, 2010, is getting stuff that sets up clean. What I mean by clean, it sets up, it triggers, you put the stop at the place it goes, you're up money, and the risk to reward is there, so you get paid. The way to make money as a trader is to have the proper risk to reward. Otherwise, you're trading and making 1, you're trading and making 2. You're basically a scalp trader, and that annoys the crap out of me, and I can't trade like that. I just don't trade like that. I see good setups all the time, and I don't take those trades. You've got to be in it to win it. You've got to be in it to get the move. How do you know what the move is? How do you know you're going to get a move in something before it even opens in the day? You've got to be able to learn to rate the gap, and then you have to be able to spot the entries when they set up in live time and know that the risk to reward is there. How are you going to do that? Got to know where the entry is. Got to know where the stop is, because if you put the stop too big or don't get in fast enough or aggressively, you don't get paid. And if you weren't aggressive on this, actually, you didn't get paid today. And it was really, 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 really something. So, as I was saying, there wasn't that many traders that did this today, I'm sure. The stock traded beautifully, even at this price point. And I've never traded the stock before in my life. I was not sure this morning when I was rating this gap if it was going to have, what kind of spread it was going to have. It had a 22-point rating. So, the interesting thing was, I said, I don't think a lot of traders are going to be in this today. And as a result, guess what? The chances of it trading beautiful and smooth and clean and pretty are great. Why? Because it doesn't have a lot of traders. There was one thing going on this today and one thing, and that was selling. Hard, nice, consistent, beautiful, fabulous, fantastic selling that went on in this today that created a beautiful move. Not jerky movements of traders. Now, were there some traders in this today? Sure, of course, but not the majority. The majority was large money positions selling out of the stock that are long it. And that's what created this beautiful, nice streamlined motion and action down that if you did trade it as a trader, you had a very nice, easy peasy day, even trading a $400-some stock. Now, that being said, why am I saying that stuff that has a lot of traders in it is jerky? Because traders do tend to scalp trade. Very few traders trade stuff for bigger moves. They will get in, they will get out, they will put their stops at different places. Lots of traders put their stops at many, many, many different places. They're too tight with them, too big with them. They put them all over the place. You get jerky tails, things ding you out. They reset up the trade, they go on and run to work. When stuff is just as the participants of the large money, things trade much, much nicer. It's, I hate to say it, it's true, but it's true. All right? So that's one of the reasons why I do love trading my system as well, because when I find a gap that rates high, the majority of the players will be big money people because they're the ones that are creating the gap in the first place, not traders. Are there traders in many of the gaps I trade? Yes, of course, but not the large percentage of them. They're not the ones that create the gaps. The people that run big money are the ones that create these gaps, and that's why many times they do have beautiful moves that aren't dingy and jerky and nice to trade. So this is one of these ones that will, be something that I snag it and keep and study for a long time. And it's one of these beautiful gaps that I actually put in every single class that I do. Why? It's an example of perfection, meaning beautiful weakness, pure weakness. Can't get a breath of life while the market is rallying today. Open and drop down like a rock. Boom. This first 15-minute bar here is $15. In 15 minutes, the stock opened and ran down hard $15. Incredible. And why do I like this? What does this mean to me? Why is this beautiful? Weakness. You want a short weakness and you want to buy strength. And whenever I see a beautiful, incredible, fabulous example of pure weakness, it's something to study, because this is how you get better at what you do. So this is Melissa with the StockSwoosh.com. This is ISRG, a great example of how fantastic my system is at any price point. Expensive, cheap, whatever. This stock had the risk to reward today. If you got in the first entry and didn't even hold it for the whole thing, that paid 4.8. And if you stayed in the whole thing, it was longer. Although, it's really hard to do this kind of thing, when you're up money really fast in something that's at this price point. Really nice example. Beautiful gap. And of course, guess what? It's lower. The fact that it broke today, broke both the first targets. The stock is lower for sure. And we'll get sold off more. And I have to see what it does tomorrow. But this is absolutely has more room in it and more potential to go. So beautiful example of the golden gap. If you're interested in more information on how to trade gaps, email me at melissa@thestockswoosh.com. The next gap class is July 20th and 21st. And actually this example right here, okay, when I said I could put it in every class, I could. I could put this in the trends class as well. Why? Beautiful example of, guess what? Chart, stock, confirming the trend. Confirming what it's doing, setting up. This is lower. It's a great example. This is the kind of stuff you have to understand what's really going on with the direction of the stock. And this is why people get so sucked up into these things that they think this gap is going to fill itself here. The gap that happened today, some people might have thought it was going to fill today when it opened down there, 70 some dollars down. Some people might think this is going to fill tomorrow and fill the gap up there $500. It will not do that. The idea of gap fills is completely erroneous. They don't work. It is not the right way to trade. It is the wrong way to trade. The right way to trade gaps is the way that I teach and the way that I personally trade them. And gosh, it really works. Look at this bar over here. It was 100 some. Almost $100 bar over here. So this could have gone, the dreamy number in this today was some sick number. It was $360. I figured it out. Obviously, it's not going to get there, but it certainly could, and it probably will at some point this year. But just FYI, this is not going to fill the gap. So, and that's, why you got to understand what these things are doing to be able to trade this price point, too. You really have to understand it. And I tell you, if you can see that this thing is going to do the thing it's going to do at this price point before it does it, and see the entries, and see where the stop's supposed to be, and see everything about it, you're on your way. You are on your way to making it. If you can even see it, you're on your way to making it. And if you don't know how to see it, this is why you have to take my class. Because this stuff matters. This is how you make money. This is absolutely how you make money. And sure, this thing could have gone $100 today. It very well could. I mean, it's not going to right now, but it could have. So if you're interested in information about the trends class too, I'm doing that this weekend, July 14th, 9 a.m. to 5 p.m. Eastern time. So have a great day, everyone. ISRG, whoo-hoo! Look at this guy. Incredible. I shouldn't say unbelievable. I believe it. I believe everything I see, everything that I know. I believe it all. Absolutely fantastic. So if you'd like more information, email me at melissa@thestockswoosh.com. Have a great day, everybody.